Most people we talk to feel stuck. They'll tell us things like, I feel behind. I wish I had more time with my family, or work is draining me. Does that sound familiar? The truth is, it's not that you don't want freedom. You just don't have a clear system to get you there. And without a system, what happens is 3 years from now, you're very likely to be in the same place that you are today. Your kids are going to be older and they won't care that your business was more successful. They'll just remember that you weren't there.
That's why we built the Passive Income Operating System. It's the exact framework we use to design financial freedom for ourselves and for our clients, not decades from now, but today. Now, the system isn't free, but the training that shows you how it works is, and it's less than an hour. So go to infinitewealthconsultants.com/PIOS, PIOS, and take the first step to buying back your time, creating passive income, and designing the life you don't have to retire from.
Welcome to the Infinite Wealth Podcast. I'm Cameron Christiansen, along with our co-host Anthony Faso. We just wrapped up our interview with Whitney Elkins-Hutten. Anthony, what's a takeaway or two that you had?
I tell you, for one, we hit off the start with a very interesting story on one of her first properties that literally a bus fell through the roof. Like, how many people can say that? But what I found very interesting, most people, and I'd put myself included, I would have that scarcity mindset and like, well, this real estate thing is not for me. I'm not going to do it. But instead, she looked at it, well, I learned a lot from here, and now I'm going to make sure that I don't make those same mistakes. And then now she built that into an entire career, which this isn't the only time. We've heard a couple of those stories, Cameron, where somebody's first or second deal doesn't turn out as planned, but they have that foundation and they take what they've learned and parlay that into the next investment. And she also mentioned how we need to stop. Everybody focus on investment. The first question is or really maybe the only question, what's the rate of return? And, she explains there's a lot more that goes into it, a lot more questions that needed to be asked. So I really enjoyed her philosophy. Cam, what was a takeaway or two you had?
Man, I had several that I wrote down, but I'm going to highlight one of these and kind of piggyback on what you said as far as the failure goes. What she said was that the reason she thought she was successful afterwards is because she didn't see the failure as a reflection of herself. And she saw it more as an opportunity to learn, which I thought was a great lesson just in life.
Yeah.
And then the other thing that I wrote down is that she mentioned that they do have opportunities for non-accredited investors. And so I would highlight that. We haven't come across too many of those. And so I thought that was great. Guys, if you listen to this podcast and you like what Whitney has to say and you're excited about learning more, that's good news because we're actually bringing her back. We don't have a date in mind, but we're going to bring her back later this year or early next year. And we're going to do a joint webinar with her where we can go a little bit more in depth. So make sure you guys check your emails, watch for those. When you see that come across, be sure to register. But we just wrapped up our interview with Whitney Elkins-Hutten, the director of investor education at passiveinvesting.com, founder of ashwealth.com, and author of Money for Tomorrow, How to Build and Protect Generational Wealth, published by Bigger Pockets. Also, she is an international bestseller in life and business, host of the Passive Investing Made Simple YouTube show and podcast, and a partner in $800 million in real estate, including over 6,500 residential units, 15 express car washes, and more than 2,200 plus self-storage units across 11 states. Guys, enjoy this episode. If you're an investor or want to be, and you're ready to build passive income that exceeds your monthly expenses, you found the right podcast. Welcome to the Infinite Wealth Podcast, where we combine the wealth building principles of Rich Dad Poor Dad with the power of the infinite banking concept to help you take control of your money and your future.
Join us as we bring insights from experts and from Cameron, as well as real-world strategies and proven tools to help you create financial freedom without relying on Wall Street. Let's get started.
Welcome to the Input Wealth Podcast. I'm Cameron Christiansen, along with our host, Anthony Faso. Today, we've got Whitney Elkins-Hutten joining us. Whitney, welcome to the show.
Thank you so much for having me on.
Awesome. Let's get right to it. Whitney, you've said that before that your very first real estate deal ended, I think you said, with a bus literally falling through the roof. Can you
Oh, that
take
was
us
number 2.
number two? Okay, awesome. Can you take us back to that moment and then maybe share how that experience kind of shaped your approach to investing?
Well, I would love to start really quick with the first one because the first one was the home run. It's why I got into deal number 2. The first deal I bought with a significant other. Relationship fell apart a month later, but I had the house, and so I thought it was gonna break me financially. Um, and I couldn't resell it because it needed a complete gut rehab. Psychedelic daisies painted all over the walls, shag carpet. It was horrible. So, stuffed it full of roommates, completed the rehab on the property, paid my friends in beer and sushi and pizza, and,
Nice.
sold the property. Yeah, right? Nice trade. Hardwood floors for, I think $80 in sushi. Like, I'll do that deal every day of the week. And then, 11 months later, I sold the property, and I realized several things upon sale. One, I had been making $300 a month because I had roommates paying the bills, and so I had 0 housing costs. 2, I got a $52,000 check in my pocket, which was almost as much as what I was making in my day job that had me traveling 60, 70, 80 hours a week. And then 3, I got to keep all that tax-free because of the 121 exclusion. Now, I had an exception to the 121 exclusion, not to make this complicated, but if we wanna dive down that rabbit hole, we can, of how I was able to keep that all tax-free. Rolled that into the second property, but here, I violated every immutable law of real estate. Now, Anthony, I see behind you, the purple Bible, right? My realtor had put that in my hand and said, "Hey, read this book." And I read the first 3 chapters, thumbed through the rest, and it was like, "Yeah, buy real estate. Got it." Like, there was more to it than that. So I bought a mountain property because that's where I wanted to live. Tried to repeat the same thing, stuff it full of roommates, complete a rehab, go to sell it, and it does not sell. Right now, we're butting up against 2006, 7, 8. So I got an offer within 2 weeks of selling the property, about 20K below what I thought I should be getting. So I'm like, "No way, gonna hold on to it." I got the same offer a year later, so I
A
took
year
it.
later?
A year later, I got the same offer, different person, same offer. And I was like, "All right, fine." Like, my holding costs have almost crushed this deal. I'm gonna take the offer. But during the due diligence phase, they flagged the back wall, a retaining wall. Now, it was fine. It was really because my neighbor's tenant lived in a school bus, and the school bus was parked over the retaining wall. So every sane person could see what was going on, but this buyer wanted the wall repaired. I just bring money to closing. Somebody else takes care of the whole repair, and it goes from $6,000 to $30,000 bill. I don't see another dime, but property closes, bus moves back into the property, back into place over the wall. Within 24 hours of closing, the bus tumbles into the roof of this bomb-proof wall, $30,000 wall, tumbles into the roof of the property. My realtor is calling me on a Saturday morning after closing, which was contentious, by the way, and all I could hear is a guy yelling in the background, and I'm like, "Is that a shotgun being pumped?" And he was like, "Yeah, the tenant in the bus doesn't wanna come out." And I'm like, "Well, where's the bus?" And they're like, "In the roof of the property." I'm like, "Wouldn't he wanna come out of the roof?" Like,
Wait a minute. So he's in the bus fell over the wall onto the house, and he's still in the bus?
the wall fell up
Uh-huh.
against the house. The bus is sitting, you know,
Oh.
right here, so everything goes like this, and the bus topples into the roof of the property.
No, where had you closed yet, or where
Yeah,
were
we had
you?
closed, but, a lot of things, can happen post-closing. Insurances, responsibility and repairs, the whole 9 yards, and so, just because you've closed a property doesn't mean that you can't be held liable for certain things, but that was the beauty of the situation is I had signed an addendum saying my only responsibility was to bring 6,000 to closing, that was it. the repair actually fell upon the buyer of the property. So they were
Oh.
the ones that were, yeah, on the hook for the failing of the wall. And I'm sure they, went after city engineers and all that sort of stuff. But anyways, it taught me a lot. Like that second property taught me a lot because, I had violated location, location, location. One of the immutable laws of real estate. I bought in a location that didn't match my business plan. Um, I learned a lot about contract negotiation. I learned a lot about like, hey, just because you've got a buyer on the hook, if they're problematic up front, you may not want to work with them. Like, you have choices. So there's so many. We can go down the laundry list. But yeah, that was I'm at this point in time, I'm with my now husband and uh I got the proceeds from closing because I did make a little bit of money on the deal still after all of this.
Nice.
And I was like, "Okay, let's go buy our next property." And he was like, "Are you nuts? Like, don't you wanna take a break?" And I'm like, "No, I think I got it figured out." Because I've now educated myself about not just real estate, but, like, how, I'm beginning my education, financial, independence education. I'm understanding how money works, how assets work, how to, cash flow things, how to start really properly underwriting property. So yeah, that was kind of the my first 2 forays into real estate. One went super well, the next one, I hit my hiccup right off the bat.
Now, Whitney, most people would have had the same reaction as your husband did. How did you have a different mindset?
It's so interesting that you asked that because, I've been asked that question before and, I come from a military family, so most people, in my family have been in the Air Force, one in the Army. And, so I guess there's just, the way that I was raised, maybe, like, led into a lot about that. But I think it's there I not quitting, not taking no for an answer. And also, like, I never saw those issues as a failure or a reflection of me. Like, I always was able to sit in the postmortem of things like, "Okay, that didn't go well at all, but why? Why didn't it go well? Like, where's my DNA on this whole issue? What was, just circumstance? What could I, have done better?" I think there's a framework: start, stop, continue. Like, what am I doing well? What do I need to continue? What did I not doing well that I need to stop? And then what are the things that I need to start in order to make the next go around run smoother? And I've always been able to kind of step into that framework, and that's something that I teach my coaching clients because, that it's real. People butt up against obstacles, whether it's investing or in their careers, parenting, and they just kind of throw in the towel, right?
I was gonna jump back just for a second. You mentioned in that first example, the second one, you said there was a section 121 that allowed you to take those proceeds tax free. For our audience and Anthony, could you explain what that is?
Yeah. So I think a lot of people, when they get into real estate, they learn about the 1031 exchange.
Mhm.
And
Yeah.
so
Yeah.
that allows people to buy investment property, fix it up, sell it later for a capital gain. But if they trade it, do perform the 1031 exchange, which has a lot of rules to it, they can actually keep their gain tax free. Okay, so it's one of the amazing ways to continue to keep kicking their tax can down the road. Okay, it's not the taxes go away. There's a whole other, you either have to die with the property, like you own the property and you die with the property in place, and then it goes to the next generation tax free, or you have to get out of it, a different way tax free. So, but there's a similar rule for owner occupied properties, and it's called the 121 exchange. So, you as an individual can buy a roof over your head, live in it, and sell it. As long as you lived in it the last 5 years, you can sell it for a gain and keep 250,000 of that tax free. Or if you're a married couple, okay, and I'm pretty sure it applies to spousal equivalents, so talk to your CBA guys. Um, you can actually keep $500,000 tax free. So that is a beautiful way for people to buy a primary residence and use the roof over their head as an investment to continue to move and trade up, move and trade up, move and trade up to keep a lot of, use the capital gains on their primary residences, to help them build wealth.
On those early deals, like you'd mentioned after that first two that you had learned, like you knew what you now you felt like you knew what to do. What were some of the things that you learned on those first couple deals?
Well, I wouldn't say that I had it all figured out, but I was beginning to understand, Cameron's chuckling at that, right? Like, my journey has been long and winding, as most people's have in the space. But first of all, like I learned that I didn't know what I didn't know, right? I really truly didn't understand how money works, and I needed to get very savvy on that. I did learn that the value that I can create in the world is can be unattached to how much time that I spend creating it, and that was probably one of the biggest lessons I learned. Meaning I didn't have to work a day job for the next 20, 30, 40 years, and trade away one of my most valuable resources, which is my time and attention. I could actually do, investing in such a way to where I could actually put in a little bit more time and, I'm using my nights and weekends, yes, but I'm making $300 to $1,000 an hour when I reposition those properties. That's huge. As opposed to like my day job where I might get 25, 50, 75 $75 an hour. So I that was a huge unlocking for me. It's like, okay, like your value is not attached to how much time that you can trade for it. And then it was about learning. I had to again, I didn't know what I didn't know. I had to figure out like where is a good place to buy real estate? How do I actually perform due diligence on it? What is good lending? And on that second property, I had the reason why I had to sell is I had an adjustable rate loan that was
Oh.
expiring. Like I had one of those ARM loans that had gone from 3% in the first 6 months to year upwards to, like, I think I was paying almost 7.5, 8%, and I'm the owner occupied on the property. That's coming out of my pocket. Like, I don't
Mhm.
really have a tenant replacing the income on that property. So, there was a lot. And, I actually started documenting a lot of those, lessons and learnings, and that is eventually what I turned into my book, Money for Tomorrow.
Awesome.
Ah, okay. Yeah.
You're teasing the audience on the money for tomorrow. I want to discuss that, but I do have kind of a question here before we jump into that. Is kind of what I've heard you say so far is that you had some experience and then you started building a personal portfolio. But I know that you've also built kind of two platforms helping investors, right? Passiveinvesting.com and then also Ash Wealth. If you don't mind, is it all right if I ask you some questions around Ash Wealth? Is that all right?
Yeah, let's do it.
Oh, perfect. So give our audience a reason as to why you started doing Ash Wealth and who does it serve?
Absolutely. So with both platforms, passiveinvesting.com, where I'm the director of investor education, and Ash Wealth, which is my own personal one-on-one coaching business. In both cases, what I'm doing is I'm teaching people how to take their active income and turn it into passive income and long-term wealth. So, with passiveinvesting.com, I'm connecting people to actual investments. Uh, you know, say like multifamily, express car washes, real estate debt investments. With Ash Wealth, I'm helping people build their one-on-one kind of investing thesis, right? And teaching them in a very short period, like, let's get you up to speed on, your fortifying your personal financial situation so you can actually be a high-powered investor. But also let's create the investing thesis here so you know what to do. Most people start going into when they hear about financial independence, financial freedom, they get they start learning about all the different investment types they can get into, and those are tactics. What I do is I bring back people back to the strategy. Like, let's understand what wealth really is. Let's understand the 4 key rules that help people that you have to master, in order to build wealth, and then let's learn the strategies around that. And then the tactics might change generation to generation. Real
Mhm.
estate's been a great tactic for thousands and thousands of years, but, we need to understand the objective, the rules, and the strategies. It's much like learning a board game, right? When you learn any board game like Monopoly, you have to understand what is your objective? Like, how do you actually win the game, right? And then you gotta understand the rules, right? We just played Monopoly a couple weeks ago, and I kept getting thrown into jail, and it sucks, and I'm like, 3 hats and a cot. All right, here we go. And
But
then you have to understand the strategy, which it was so cool watching my 13-year-old finally realize the strategy of acquiring and trading people properties, which she hadn't done before, and then sitting on them and building. I mean, it was crazy. It was so cool to kinda see her unlock that strategy.
Yeah.
now, Cameron, you're gonna have to focus on that strategy next time you're playing Candyland. But Whitney, let's say if I'm a high income W-2 earner looking to escape the rat race, what does building this investor thesis actually look like in practice?
Well, yeah. So, I start everybody out, understanding, their own personal, financial foundation. So, like, how do we, create as much optimization in our own ecosystem? How do we keep as much money in our ecosystem? So, plugging the leaks, and then we get to the grow part. In that investor thesis, like I said, most investors will go, in my space, they'll be like, "Hey, I'm in stocks, bonds, and mutual fund, but my neighbor just invested in a passive real estate deal that sounds amazing. Tell me the returns."
Hmm.
Right? And I'm like, "Ooh, we just skipped a lot of steps." My conversation with them will be like, "Oh, well, tell me your goals. What are you looking to do with your portfolio? What do you needed to do today, tomorrow, 10 years from now?" So, creating the thesis is looking at all these introspective questions that should have already been addressed. Okay. But that's not the fun stuff, right? Nobody wants to sit there,
No,
right?
that's not fun.
Yeah.
So we have to understand, what is our goal? Like, what do we want? Okay. I always think about how help people understand either why they want that goal, or if they can't. Some people, when you ask why, they get a little defensive and we're like, well, because I want money. I'm like, no, okay, well, how do you want to feel when you achieve the portfolio growth that you are desiring? So, what do you want? Why do you want it? Or how do you want to feel? And then we look at risk tolerance and then risk capacity. So, somebody might be, you know, no, like they want to invest their last $50,000, and they're willing to swing for the fences to get it because they are so driven to hit their goal. But if that's their last $50,000, like, their capacity is pretty low if something happens in the market with that investment. So I walk people through a framework. You can actually find that framework on our YouTube channel, Passive Investing DOT.com. So, you just spell out dot. Um, anyways, yeah, starting with the what, the why, risk tolerance, risk capacity, and then we get into timeline. Where are you in your investing journey? How much time do you have to recuperate from, any bumps in the road or losses? And then we get into making decisions around cash flow, equity growth, use of leverage. Do you want to invest in assets that have leverage attached to them? Because leverage is a great wealth amplifier, but it can also destroy wealth too. What does your diversification look like? We go back and look at liquidity and reserves. We look at investments that you have already that have cash flow, like safe, predictable cash flow to them. And then we look at, how much of the portfolio is allocated to equity investments. And then, have a conversation on, like, what is an optimal balance for you? Because so many investors just want to get to the deal and they're like, give me a checklist so I can evaluate a deal. Okay. Then your borrowing, that checklist is based on somebody else's investor thesis. So you have to sit with these questions. That way you can actually take that checklist and bump the questions that are super important to you to the top, or rephrase questions.
We are very similar, is what I'm hearing in our process, right? Is oftentimes we have
Yeah.
clients that call us. Everybody wants to get to the end, right? They all come in and they say, "Hey, I want $30,000 a month of passive income." Great. How are you going to get there? I don't know, but I'm just going to go throw money at this X fund or whatever it is. And so nobody has any of those steps laid out. So I love the fact that you kind of went through those. I heard goal, figure out the why, the risk tolerance, timeline, and then come into a decision. Is that right? Were those the four key rules that you had kind of alluded to?
Well, when we come to the creating the strategy around the investor thesis, those are 4 big blocks in there, but we do need to, like, flesh some of those out a little bit more. But I really encourage people that one piece after, like, what do you want? The feeling, the emotion, like, the why do you want it, right? Because I find a lot of people that they may be in a high sales job or they've grown their own business, and they're like, don't I'm always gonna be in business, right? Like, they talk to me about passive investing, they're like, "That's boring." And then I'm like, "Okay, let's put this down. Tell me when you build your portfolio in 10 to 15 years, how do you wanna feel?" They're like, "Oh, I wanna be able to, like, wake up when I want, spend time with the kids, go travel." And I'm like, "Okay,
Man,
so
yeah.
we need 2 theses. You're still the go-getter in your business, but
Hmm.
we now that need to figure out how to shift some of that active income that you have into this to create to achieve this goal, create this emotion that you're desiring on the passive that side of things, because you're not always gonna be active,
Yeah.
right? But I think sometimes identities get connected. I see it quite often, like, with physicians, lawyers, like, their identities are very attached to their jobs. I know for me, like, in public health, I went to an incredible amount of a long many years of school. It took me forever to, like, unhook my identity from my job.
Yeah.
Um, but, sitting with that emotion about, like, what feeling do you wanna have? Not at the end of the journey, but, like, when you're making that transition, when you're ready to kinda step away from full-time work, that's the portfolio we need to create. And we need to start with the more time we have to work on that portfolio, the simpler it's gonna be, the smoother that trajectory will be.
I agree. Right, getting clarity on somebody's why is really the reason that people are going to make a move. So awesome. So thanks for kind of sharing an overview of kind of what you're doing over there at Ash Wealth, but also as I know you're involved with passinvesting.com, which you alluded to. So as director of investor education, how do you help people get into deals passively? What does that look like?
Yeah, so I do a lot of free education to help people understand what is passive investing. How does that differ from you buying your own rental, right? We are investing in expert operators deals. Again, we go through the same process of understanding, at a high level what it is you want, why do you want it, understanding your risk tolerance and capacity. And then we get into like, okay, now that we understand these things, now that you understand what I do, I understand what you want as an investor, we get into what investments best match your goals. And, I work hard to help people kind of think through that, for what they need in their portfolio today, but also like, for the future.
Now, are those investment opportunities, are they open to accredited and or non-accredited?
So both.
Okay.
Actually, we are probably by the time this podcast release, we will have released our Regulation A fund, which means we can work with sophisticated investors and accredited investors that want to invest at smaller denominations.
Nice.
But yeah, to date, we've worked largely with accredited investors. So we're
Mhm.
super excited about this Regulation A fund being rolled out.
Winnie, if you don't mind, I'd love to transition over to that book that's over there behind you on the wall. Money for
Absolutely.
tomorrow. Why did you feel that the book was needing to be written, and what would be one of the biggest takeaways for someone if they're just kind of taking a look at it?
Kind of I alluded to this a little bit earlier. I was keeping a compilation of notes for myself on my investing journey, and then I became a mother, and I was like, okay, they need to be a little bit more organized in case something happens to me, and my daughter now can like run with the portfolio and do so in a way to where we're not just handing her wealth and that she like spends it all, right? We wanted her to be a good steward. So that's really how this started. Now, how it turned into a book was just being in the right place at the right time. I was speaking at the Bigger Pockets conference, and M after my presentation, the editorial committee came up to me and they were like, "Have you ever thought about writing a book?" And I kinda paused, and a friend of mine, like, elbowed me and was like, "Yeah, of course, she'll write the book for you."
Yeah.
I was like, "Okay, I don't know how to write
Thanks,
books."
friend. Yeah.
Yeah, that's a
Oh, no,
good
it was
friend.
perfect. That was a good friend to have. It was an amazing process. Writing is actually the easy part. One of the biggest takeaways that I think, anyone can get from the book is, if you're a new investor, I would love to get this book into high schools because I think it would, really set high schoolers, teens in college up to understand money, and build wealth from, correctly from the beginning. However, you're a seasoned investor, I really encourage you, or if you're well down your financial independence journey, read the book because I have had so many people tell me that when they went back and worked a lot of the early steps, one, they found so much more in their own financial ecosystem that they could redirect and invest. But two, they feel more confident now in the volatile markets that are happening. And so I think the biggest takeaway is building your financial foundation correctly from the beginning. And understanding it's not just about tactics, it's about understanding the fundamental strategies and why they're there. One of the
Mhm.
big, Cameron, you and I spoke a couple weeks ago. One of the biggest things that we find with investors is they don't track their income and expenses as closely as probably as they should, or their balance sheet. Well, that's like asking a soccer player to, not warm up, jog around the field, pass the ball, right? They're not gonna be very effective in any soccer game, if they don't know the basic skills, if they don't know how they're performing there. So
Yep.
we work backwards to, we regress in order to progress forward.
Whitney, in our pre-interview, you had made a comment or a sentiment to me about the name of the book. So, if you could rename the book to better reflect kind of what it delivers, what would you call it?
So I think, to clarify, Money for Tomorrow, and when you're working through an editorial process with any publisher, and Bigger Pockets has been amazing to work with. Some things are in your control, some things you just influence. And that was one of the things that I got to influence. Uh and not control. But if it were me, I would, maybe the money tree. I mean, I know that's taken by Shel Silverstein, but I wanted people to understand how they can actually build money for today and have it to continue to grow and reproduce year after year for them. I think when people look at Money for Tomorrow, and I've seen these comments on Amazon when people are, leaving reviews, they're like, I don't want money for tomorrow. I need it
You
today.
want it today.
Uh,
I want it
yeah,
today.
I
So
want it
that would
now.
be the one thing that I would change. I think people, get a little impatient, and it's kind of like the Trojan horse. You should, give people what they want, but then deliver what they need.
Well said. Whitney, also in our conversation previously, you had an interesting take on infinite banking. You mind sharing kind of how you guys have used infinite banking in your personal life?
Yeah, so we don't do full infinite banking, so we're not running all of our income through our policies, but we, have used it, as a huge redirection on how we think about retirement funds, and, and really for me, it locked in when I saw the graph on how retirement accounts, the fees are done. They like as
Mm,
your retirement account grows, so does
yeah,
the fees on your I'm sorry, so do the fees, they grow too.
Yeah.
So you lose like
Yeah.
31, 33% of your wealth. But when I did infinite banking, it was couldn't wrap my head around it until somebody showed me the fee structure. And you get this blip at the very beginning. Once you overcome that initial fee structure, then it's like pretty stable. I was
yeah.
like, "Oh, wow, I get to keep so much more." Now, so we did that as a replacement for our retirement accounts largely, but it's allowed us to be very liquid in illiquid markets, but also, if we have like 2 or 3 properties under contract, that's the worst time when you're trying to, you're taking out loans, that's the worst time to go make a big purchase, like buying a new car or a travel trailer. And these are some oftentimes have been replacement, items or things, that we've traded up on. And so we've used it for that. We've used it for investing. landed on a debt fund investment that, made, 3x of what my loan rate would be. So that was a nice use of arbitrage. So we've used it for several different things.
I think you said was the name you called it your idiot money? Was that
Oh gosh, yeah, my idiot policy.
your idiot?
So, yeah, thank you for reminding me that happened, Cameron. So for me, I think of it, as also like kind of my stopgap. Like if I'm a complete idiot with all my investments, I will, as long as I can keep the policies intact. My daughter, we do get to continue on building generational wealth within our family. So that was a concept I actually learned from a friend of mine, Christina Suter. But I've since adopted it. I'm like, yes, that is exactly one of the reasons why I have those policies.
Nice. Winnie, for anybody that's out there listening that might still be working a W-2 job and is looking to transition their active income to passive income, what's the first step they could take?
There's no shortage of education out there. So once you have landed on a blueprint or found somebody that has achieved what you wanted to achieve, I would then get into action, get close to them, grab the blueprint. Maybe it's money for tomorrow, maybe it's working with Cameron and Anthony, but get close to them and start taking action, because really your biggest favor that you can give to yourself is time. So could have done this like 10, 15 years ago. We all have the woulda, coulda, shoulda, but the next best time is today.
Love it. Well said.
Winnie, what would you say is there one mistake that you see investors commonly make? Is there one that you would point out?
Starting to invest without sitting down, even for just an hour, and thinking through their thesis, because they will get into, because especially in my world, when we're investing in real estate and passive investing, um, some of these investments are very illiquid, and you might, get tied up in an investment. Your time horizon was 3 years, but the investment time horizon is 7, or quickly becomes 7. So that thesis is huge, and that thesis will also drive what kind of operator you're looking for, maybe even the markets that you should be investing in, but absolutely the type of deals that you need to be going into.
When if somebody's out there, right, where can they find your book, Money for Tomorrow, and then also passive investing? Is there a website that we can direct them to?
Absolutely. Well, so passiveinvesting.com, you can go directly there. If you want to connect with me, go to passiveinvestingwithwhitney.com. And you can find the book on Amazon. I encourage anybody, if you grab the book and, love what you are reading, make sure you leave a review, because that's how other people find it.
Love it. Awesome. Whitney, thanks so much for your time. Really appreciate the interview. This is great.
Absolutely. Thank you so much for having me on.
Yeah, thank you, Whitney. And we're looking forward to doing a joint webinar with you soon. And appreciate your foundation of education and really planning your investing with the end in mind. Oftentimes people are looking so much further at the rates of return. They're not thinking of the overall big plan. So thank you, and we wish you the best.
Thank
And
you.
go make a fantastic day.
Take care.
The opinions expressed on this podcast are solely those of the hosts and guests and do not constitute financial advice. Always consult a licensed professional for professional decisions. Thanks for listening to the Infinite Wealth Podcast. If you enjoyed today's episode, be sure to subscribe so you don't miss future conversations on building wealth and creating passive income.
You can learn more about infinite banking and get additional resources at infinitewealthconsultants.com. Until next time, keep investing with intention, and remember, your financial freedom is within reach.